While the South African Reserve Bank's Monetary Policy Committee, as we heard, will this Thursday announce its decision on interest rates following its 50 basis points increase at its May meeting, which brought repo rate to 8.25%. The move came on the heels of March's 50 basis point hike that brought the cumulative increase to 475 basis points since the tightening cycle started in November 2021. We're now joined by senior economist Dick Forslund to give a sense of what to expect tomorrow as the Reserve Bank is set to announce the repo rate. Well, a very good afternoon to you, Dick. More good news we expect tomorrow, or is that the possibility? I mean, what impact is the low inflation on the repo rate?
Well, I think the Reserve Bank has very tightly been following the Federal Bank of United States, the Central Bank of United States, as they stayed put at 5 point. They have a 3 percentage points lower internal bank rate than South Africa. And as they stayed put in June in the decision, maybe the South African Reserve Bank also will keep the interest rate now at the bank rate at repo rate at 8.25%. But you should never say never, because it might be also that the Reserve Bank wants to have a larger distance to the US central bank rate, and then we would see another rate hike, but we will see. It is very much dictated of external factors, in my view, and it's not so much dictated by what is happening internally and with inflation. We will see. And when it comes to inflation, if you read the report, you will see that the inflation rate is much higher for households which are consuming from 145,000 Rand and less per year. So for the consumers, the inflation is continuing at a very high rate for the majority of consumers.
Let's stay on inflation then. Annual headline inflation slowed to 5.4%, as you've also just corrected, in June from the 6.3% the previous month that we saw. SABC says this is the lowest level in 20 months, even though you still say South Africans are feeling the pinch. Just talk to us about the main contributors that we are seeing now on the annual inflation rate.
Well, the main you mentioned bread, vegetables, around 21% inflation or price increase over 1 year. Bread and cereals, vegetables around bread and cereals 15%, vegetables 21%. When it comes to transports, 9% and so on. So those items which are common in low-income households, those price increases are higher than the so-called average. And the average, as many viewers know, it is kind of biased towards high-income spenders or high-income household spending. And that is a fact in South Africa, where you have such income inequality. So when you look at households who are sort of the rich households, or those who are spending less, then the inflation rate is lower than the present 5.4%. And the reason is that what they are spending on those items or those services have increased in price at a lower rate. So it is a very high spread, a very deep spread, or very wide spread between the households, how they experience inflation right now, I would say.
Let's just, talk about again the expectations of tomorrow. I know, of course, you say it could go either way, but I want you to explain a little bit about, in terms of what we saw the last time the inflation rate, came with the central bank's 3 to 6% target range. That was in April of 2022 when CPI registered at about 5.9%. If you can just unpack what this essentially means for the consumer.
Well, as I try to elaborate, we don't really have one consumer in South Africa. We have a spread among consumers between low-income households and middle-income households and high-income households. And as for the inflation on basic foodstuffs, unfortunately, it is higher than the 5.4%. But I mean, that is nothing that you can influence by increasing the interest rate or manipulating the repo rate. You have to deal with that in other ways, but that is ways that the SARB and the government unfortunately is ruling out. And I mean, you might remember that AIDC already at the last repo rate, we in fact called for the Reserve Bank governor to step down and saying that there should be a completely different monetary policy. And I mean, in this situation, when you have a unemployment rate of over sort of 44% by expanded definition, the interest rate, to have an interest rate which is on the same level as high as it was in 2009, in our opinion, is completely wrong. So what would be good, but what we can't expect, that would be a policy statement where the Reserve Bank say that now we are starting a trajectory of lowering the interest rate because the unemployment in the country is too high, and we have to target the domestic economy and not target sort of the will or the interest of a few economic institutions who, of course, is profiting from this high interest rate. I mean, if you have 0.5% or 1/4% interest rate hike of the repo rate and of the prime lending rate, it translates into tens of billions of rand in the real economy, in the domestic economy, which goes to the bank and the financial institutions, and it's taken off from domestic demand, and that is bad for employment in the country. So that is what we would like to see. We would like to see a decrease of the repo rate, but that is not what we can expect tomorrow.